cut rates, with some dissenting members pushing for a quarter-point reduction. But most officials held them steady, keeping Americans stuck with high mortgages, car loans, and credit card bills. And at the same time, President Trump is calling for Fed Governor Lisa Cook to resign following mortgage fraud allegations. Now, Cook is a Biden appointee, not a Trump ally. If she steps down, someone who Trump fully trusts to fight for Americans' wallets could replace her. Jeffrey Small, managing partner of Retirement Income Source, joins me now. Jeffrey, so Fed minutes just released. What jumps out at you? And what does it mean for everyday Americans waiting for lower rates on mortgages, car loans, and credit cards?
Yeah, it's pretty disappointing. I think to put it in context, for every 1% increase in rates, it really equates to about $360 billion of additional interest that consumers have to pay. And the ultimate co-conspirator or creator of inflation really has been the Fed and their terrible monetary policies since 2020. They've exacerbated their own rate of inflation through asset price increases, and they've made the average home today unaffordable because of all the money printing they did from the extra stimulus that we've done. And so, all I can say, Alicia, is that the Fed doesn't have the consumer in mind. I'm not quite sure who they have in mind at this point because they're defying common sense with their hawkish stance on the economy.
Speaking of the Fed, the president said that Jerome Powell is hurting the housing market and Americans trying to get a mortgage by holding rates steady for so long. And he also said there's no inflation and every sign is pointing to a major interest rate cut. Your take on that?
Well, I think, the markets are saying there's a 93% chance of at least one rate cut this year happening next month on the 17th when they meet in September. And so, I'm in the camp that, because employment is so steady, and we do some weakening spots in the economy, but with the last week's PPI number is shooting up, and even though that's only the fourth barometer they use, really on the top of the list there for measuring what they're going to do, I think there's a chance they're not going to lower rates at all in September, and they're going to use stagflation and the tariffs as the scapegoat.
Okay.
And I think we're going to have a divergent Fed from what reality is, really.
So I know you have your eyes on Jackson Hole, Wyoming this week, where Powell is set to deliver remarks ahead of the Fed's next meeting, which we just talked about in September. Do you think we're going to learn anything out of that? What do you predict will come out of it?
Well, I think we're going to see that Chairman Powell on Friday, when he comes out with his remarks at Jackson Hole, is really going to be non-committal. He's going to be more hawkish than dovish, emphasizing data dependence and Fed independence, which will reassure markets in the short term, but it won't do anything for the economy. And so if we have a rebound in jobs or we end up with a little bit higher inflation between now and then, we could very easily see him become more hawkish and say, look, no rate cuts at all. But any further labor weakness really seals the deal for more cuts potentially. A bond yield rise could also create a stock pullback here with what we've got going on. So if he doesn't raise rates and the employment gets stronger, inflation gets better, we could see rates go up organically as well on bonds, and that will hurt the market.
Yeah, but we also have all the revenue from the tariffs and foreign investments as well. So there's a lot going on in the economy. Let's quickly touch on the legal drama. Fed Governor Lisa Cook accused of mortgage fraud. Trump has already called on her to resign. She's generally supported rate cuts, but if she does step down, how might Trump's choice for her replacement influence the central bank and the overall economy?
Well, I mean, one more vote hawkish or one more vote dovish is not going to change the theme, right? It's not going to really affect the outcome of what happens with rates. So I see that as being relatively benign. But it's amazing how all these bureaucrats end up committing mortgage fraud today, whether it's a politician or it's a bureaucrat. They think they can, have rules for thee and none for me, right? And so it's a very sad day in the economy when we see folks in the country and we see folks behave like this, Alicia.
Yeah, we're seeing something similar with Letitia James. That's a whole different story. Jeffrey Small, managing partner of Retirement Income Source. Appreciate your time as always.
Thank you.
Thank you.